Okay, everyone, good morning. Welcome to our lesson. It's Wednesday, which means it's almost the weekend, and I hope you're all okay. So, today we will be continuing our discussion on stock or inventory. So, these two are the same things, okay? It means, the things you have, it's an asset that you're going to sell. And you did this yesterday, you did this on Monday with Miss Mary, and I believe she did a fantastic job explaining the basics to you. So today I'm not going to do all of them. I know you already have the slide that very nicely explains first in, first out method. I know you have already briefly discussed the weighted average method, and you know that, hey, this is different for the perpetual inventory system as it is to the periodic inventory. So just very quickly, when we use perpetual inventory for weighted average method, we calculate the new average price after new sales. If we use periodic, it is at the end of the financial period. And this diagram also really summarizes how to calculate total cost. Okay, so moving on, and I'm going to be very brief about this. I'm not reading all of this. I will send you this PowerPoint right after this video, which means you can save this. I'll send it to you as a PDF. So that means you can save these notes. You can write it down for yourself, or you can just go back and read them. So I won't be going through each one today. But very quickly, you need to note that the perpetual system uses the trading stock account, but the periodic system uses a nominal account called purchases. Purchases is an expense account. And the main difference here is that cost of sales is calculated every time goods are sold. And what's very important for you is that when you use the perpetual system, you need to know the format of the trading stock account. If you learn the trading stock account, this will make all your calculations for the perpetual system very easy. However, when you're using the periodic system, you need to learn the cost of sales formula. And here it is: opening stock plus purchases plus carriage on purchases. Carriage on purchases means the transportation of things you have purchased, plus import duties, plus customs duties, and minus closing stock. So learn this formula for periodic, and in the perpetual, learn the trading stock account. Here it is, very nicely set out for you, and you can see most of the things go on to the debit side. On the credit side, we only have the closing stock and sales. And it also tells you that this amount for closing stock is your cost of sales, or this amount in units, right? So please go ahead and learn this. I will send this to you, this entire document, as a PDF right now. And so one last thing, okay, in today's question, okay, here's today's question. Now, so we're looking at, as you can see, it's from a past paper, and we sent this to you, and this is what we'll be looking at. Now, the first question here says, the method that is appropriate for very expensive, individually recognizable items is the, okay. So I'm not sure if you did this in the last 2 days or if you know about this, but in addition to periodic and perpetual, there is one more method. And this method is mostly for goods, like they say, it's very expensive and they're individually recognizable. That means each product you have is different. So if all the products you have are different, you can't really assign the same cost of sales to all of them, right? Think about diamonds. Okay, very expensive in a jewelry store. And now all of them are a little different. Some are bigger than the others. Some are better quality than others, and they will obviously have a higher price. So even though they're all diamonds, they all need to have their own cost of sales. So we cannot use perpetual, we cannot use periodic. What we use is a method called the specific identification method. Once again, I will send this to you. Specific identification method. And so we don't use first in, first out. We don't use weighted average. We use the specific identification. And as you can see, every item is assigned a specific or a different cost price. And we use this when large amounts are sold, but each unit has its own cost price. So the very first answer today is which asked you, hey, what's the method we use when something's expensive and individually recognizable? And that answer here, why is this in white, is specific identification method. Okay, very good. I'm going to move on to the rest of the questions in a new video. If you have any questions, please be sure to ask me at any point and I'll try my best to help.